Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live. Tonight I wanted to make a video on an approach that I use every day called the overnight SPY trade. For those of you who visit my live stream, which by the way is every day, Monday through Friday, during the last hour of the market on YouTube, where I teach and I trade live and I mentor. And so if you're just running across this video, please come visit me during the last hour of the market, Monday through Friday, and you'll see me doing the SPY trade that I'm going to talk about tonight. My trading philosophy is I like to trade many different time frames, sometimes monthly time frames, weekly time frames, daily time frames for my swing trades. I do a lot of day trading on smaller time frames, but I also have a trade that I do every day called the overnight SPY trade. And basically, I buy the SPY every day at the close, I hold it overnight, I sell it the first thing, and I do it every single day. It's essentially like me owning being a buy and holder of the S&P, but I'm only holding it overnight, not during the day. So why would I do such a thing? Well, I do this based upon a long-term back-tested study from Liz Ann Saunders. She is the Chief Investment Officer at Charles Schwab. And when I saw this data, it would really interest me. I started doing this a couple years ago. By the way, she's at Bespoke Invest on Twitter. But this back test here is from 1993 up until 2019. And so they tested two approaches. The first approach was buy the SPY every day at the open, hold it through the entire day, sell it at the close, and do this every day. If you did this every day from 1993, so buy in the morning, hold it all day, sell it at the close. If you did that every single day since 1993, you would have actually returned a negative 13.9% return for all that work and all that trouble. But the second approach, this is the one that I use, instead of buying it at the open, holding it all day, selling it at the close, you do the exact opposite. You buy the SPY at the close each day, you hold it overnight, you take the overnight risk or the over weekend risk if it's Friday to Monday, and that's where I really believe that the edge is in this approach. The edge is in taking the overnight risk. What happens is people at the end of the day, they sell their stocks because they don't want to hold it overnight because they feel like it's risky. Then overnight goes by, nothing happens, people start bidding it up again in the morning, and that's, in my opinion, where the edge is in this approach. But so buy the SPY at the close, hold it overnight, take the overnight risk, sell it first thing the next morning. This approach returned a positive 634.2%. Now compare that with doing the opposite, buying the open, holding it through the day, selling it at the close. Every day since 1993 returned a negative 13.9% return. The opposite, the one that I use, buy the SPY at the close, hold it overnight, sell first thing the next morning. This gained a positive 634.2%. Huge difference. Now, past performance is no guarantee of future result. Of course, that's true for any trading approach. There's always risk with anything. Just because something's worked really well like this in the past does not mean it's going to work in the future. But if I'm going to allocate money towards a trade, I would much rather allocate it towards a trade that has a good back-tested result than something that doesn't, right? So again, past performance is no guarantee of future results. If we look here at the graph, the blue line is the buy, the close, hold overnight, take the overnight risk, sell it first thing the next morning. Since 1993 up here until 2019, you can see all it has done is gone up and up and up. But there are significant drawdowns with this. It can go up for years and then it can come down. This peak to valley here, this was like 2.5 years. And then it roared up for another 4 or 5 years and then down. I've been through this. I started using this in 2019 up until present. And, you know, the beginning of this year, this is 2020, in February and March when the market was just melting down, it was brutal. I mean, I was down big for the year in 2019. Just a few days ago, I actually kept using this and using this approach. Even after the horrible start, I am green, profitable even this year using this approach. So let's look at the lines again. Blue line is the buy the close, hold overnight, sell the take the overnight risk, sell first thing the next morning. The orange line, buy in the morning, hold all day, sell at the close. You can see over time, this has done, the orange line has done nothing. The blue line has done great. But again, there are significant drawdowns. So you have to be, you know, my advice is if you're thinking about using this approach, use a very, very small position size and be consistent and just do it every day. 5% would be good conservative approach. You know, if you had $100,000 in your trading account, 5% of that is $5,000. So you would buy $5,000 at the close each day, sell it first thing the next morning, and hopefully you're selling it for a little bit more than $5,000. There will be times and there will be streaks of times where you will sell it for less. But I've been using it now for not quite 2 years. 2019 was very profitable. And this year, 2020, like I said just a few days ago, I went profitable for the year. But the results are really good. And really, you know, what this approach basically tells you is we know the stock market has gone up since 1993. Obviously, it's gone up. But what these results are telling you is that all of the gains in the S&P from 1993 have come from the overnight gaps. They have not come during the day. I mean, just looking at these statistics here, during the day has actually been negative. So, you know, try to wrap your head around that. All the gains in the U.S. stock and the S&P 500 have come from the overnight session, which is, you know, I said this many times, or I talk about this trade very often, but every time I say that, it still just kind of blows me away. So the key with this approach, be consistent with it, use a small position size, like 5% would be good to start out something that it's not going to, you know, too large of a position size where you're going to be worried about it, because it can go in streaks. It can really go in streaks. So I'm going to show you just a few trades here in the last little bit. I'll start over here. Of course, the little hash mark on the left is the open. The hash mark on the right is the close. So I took all these trades. I bought here at the close, sold for a nice little gap up. Bought here at the close. This was probably just a very small loss. Bought here at the close, sold the open for a gain. Bought here at the close, sold the open for a loss, definitely a loss. And then reversed it from here to here with the gain, from here to here with the gain, from here to here with the gain, from here to here, break even, small gain here, bought the close, sold the open, bought the close here, sold the open for a pretty big loss. Here to here was even. This was a very big loss. Bought the close, sold the open for a loss. And then this last 1, 2, 3, 4, 5, 6, 7, 8, 9 days has been really, really good for me. Bought here, sold the open for a profitable trade. Bought here, sold the open for a profitable trade. Bought here, sold the open for a profitable trade. Actually, I think this one is the one. There's been twice in almost 2 years that I have not done it, but I decided not to do the overnight SPY trade on the night of the election. However, you can see it would have been profitable for me, right? Close to the open, nice big gain, followed up by another buy the close, sell the open. This gain here, where I bought the close, look at this open that I had here. This was a record. This was bought here at the close, sold at the open. That was almost 13 almost 14 points in just the overnight gap. And you can see I got out right at the top, which happens a lot of time, not all the time. Sometimes you'll sell the open and it will go roaring back up, right? So, but over time, it works out. It has worked out. Doesn't mean it's going to in the future, but I really do like this trade just because it's a different type of time frame for me. It's just an overnight trade, and the results work out well. You can see here today in the live stream, I bought here right at the close, 356.67. This is on Wednesday's close, 356.67, and I will, I'll put an order in tomorrow. I do it at nighttime. During the day, I put a market on close order in. So I'll just say, buy 100 shares of the SPY at the close. Then I don't have to worry about it. It does it automatically. And then when the market closes, I just say sell those 100 shares at market, and it will sell it the first thing the next morning. So it's a pretty easy approach. It is very streaky. You can go through dramatic drawdowns, so be very conservative. Like I say, a 5% position size is something I would recommend because it's very, very, very conservative. But it's just another tool in all the different trades, the trading approaches that I use. I do like it. I'm very happy that it's been positive so far this year. I think in 2019, it wasn't a full year that I used it. I think I started in February of 2019. It was just over a 12% return for 2019. Annualized, it was probably closer to 13 or 14%. And then this year is positive, but just barely. So if you average the two together with the time remaining in the year, I guess I would have to say approximately 7% a year so far that I have experienced. But as I showed you from the graph, over time, all the gains have come using this approach. So that's the overnight SPY trade. It does also work on the NASDAQ. It does also work on the SSO, which is double leveraged. I have seen results and numbers from that as well, and it works there as well. But the S&P is so widely followed and so forth that I just wanted to do it on this. So anyway, I hope that was helpful for you. Again, if you haven't been to my live stream, it is Monday through Friday during the last hour of the market. I place live trades, I teach, I mentor, ask questions, and it's all in real time. And we have a great group. We have a lot of great people in that group. So I would invite you to come by. And so anyway, I hope this is helpful. Hope you have a good rest of your day. And hopefully see you during the last hour of the market on Gossett Trading and Mentoring Live. All right. Take care, everybody. Bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.